Good evening, everyone. Welcome back to the channel. It's December 13th, 2024, and today's stock market action has been nothing short of eventful. From rising investor optimism to a few unexpected twists, we've seen some significant moves in major sectors. Now, with the next trading day just around the corner, let's take a closer look at how things unfolded today and forecast what might be in store for tomorrow. If you're looking for a clear and straightforward breakdown of the US stock market today, and what you can expect tomorrow, you've come to the right place. But before we dive into the details, make sure to hit that subscribe button and turn on notifications, so you never miss out on daily updates like this. Let's begin with today's performance across the major indices. The Dow Jones Industrial Average saw a modest uptick of 0.4% today, driven largely by positive earnings reports in the healthcare sector and continued strength in industrials. However, the S&P 500 remained relatively flat, closing just under a 0.1% gain as investors wrestled with concerns over inflation and global economic uncertainties. Meanwhile, the Nasdaq took a hit, dipping by about 0.5%. A slowdown in tech stock performance, particularly in semiconductors and cloud computing, dragged the index down. This trend comes as investors are cautiously eyeing the potential effects of rising interest rates on high-growth stocks. Speaking of interest rates, the Federal Reserve's actions remain in focus. With inflation data showing signs of moderation, there's growing speculation that the Fed may take a more cautious approach going into the next year. But there's still a lot of uncertainty, and this is keeping some investors on edge. On a brighter note, the energy sector has been resilient, continuing to gain momentum with oil prices seeing an increase after OPEC's recent announcements. This is positive news for energy stocks, which outperformed today, especially in companies tied to natural gas and renewable energy. Let's take a closer look at some of the key sectors driving today's action. Financials were among the winners today, with banks like JP Morgan and Goldman Sachs seeing a solid rebound, benefiting from investor optimism and strong earnings reports. These stocks were helped by the general market's positive sentiment, despite some of the challenges in the broader economic picture. Another strong performer today was the consumer discretionary sector, particularly in luxury goods. Companies like Tesla and high-end automakers saw notable gains. With the holiday season approaching, demand for luxury products remains resilient despite broader economic challenges. On the flip side, the tech sector faced some pressure, especially from the semiconductor and software companies. Tech stocks have been underperforming for several months now, but many analysts are predicting a potential rebound in early 2025. However, this outlook hinges on broader economic data and interest rate developments. So, what can we expect for tomorrow, December 14th, 2024? As the holiday season heats up, we're looking at a busy day ahead, with several key economic reports set to drop. The focus will be on the retail sales report, which will give us an indication of consumer spending trends heading into the year-end. If retail sales show strength, we could see a surge in consumer discretionary stocks. Companies in retail and travel are likely to see more attention, with investors hoping that spending will stay robust despite any signs of inflation. Tomorrow also marks the start of the earnings season for some major companies, so expect more volatility in the markets as corporate results start rolling in. Big names from the tech sector, like Microsoft and Apple, are due to report in the coming weeks, but tomorrow we're focused on some smaller firms, which could set the tone for the week ahead. Another factor to watch will be any updates from the Federal Reserve. If we see any hints from Fed officials about future rate hikes, this could cause some market turbulence. It's important to keep an eye on these developments, as the Fed's actions will continue to play a major role in shaping the market's future direction. Looking beyond tomorrow, the next week will bring even more data into the spotlight. We're heading into a crucial period for economic indicators, and with the stock market still reacting to the Fed's stance on inflation and interest rates, volatility could remain high. Investors will be closely monitoring both the labor market data and consumer confidence numbers as they assess the outlook for 2025. If consumer spending continues to be robust, we could see a shift back towards risk-on assets, like growth stocks, which have been under pressure for most of this year. On the other hand, if inflation concerns continue to dominate, expect defensive sectors to remain in favor. It's a mixed outlook for the markets right now, and while we've seen positive gains in some sectors, caution is still the name of the game. So, what should you be doing as an investor? Stay informed, stay flexible, and continue to watch for any shifts in the economic data. Remember, timing the market can be tricky, but understanding the underlying trends and the macroeconomic factors at play will help you make better decisions. Make sure you stay tuned, because we'll be bringing you the latest market updates, forecasts, and key insights to help you navigate the ups and downs. If you enjoyed this breakdown, don't forget to like, share, and subscribe for more daily stock market news. Thanks for tuning in, and I'll see you in the next video.